Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LUZHOU Bank Co. Limited annual report. LUZHOU Bank Co. Limited offers a wide range of services to cater to the diverse needs of its customers. At the corporate level, the bank provides loans, bill discounting, corporate deposits, and financial services for micro and small enterprises. In retail banking, it offers personal business and consumption loans, personal residential and commercial mortgage loans, as well as bank cards and wealth management products. The company's financial markets segment includes money market transactions such as interbank deposits, interbank lending, bond repurchase, bill rediscount, and issuance of interbank certificates of deposit. It also engages in investment activities like bond and SPV investment, as well as asset management. Additionally, LUZHOU Bank Co. Limited provides settlement and agency services, guarantees and credit commitments, and investment banking services. In terms of specific business offerings, the bank services can be broadly categorized into corporate banking, retail banking, financial markets, and other services. These include a range of products such as loans, deposits, mortgage loans, bank cards, wealth management products, trust plans, precious metal products and services, collection and remit tax services, and investment banking services. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of key financial metrics. On the positive side, significant revenue growth was driven by an increase in deposits and loans. Specifically, corporate loans saw a notable 21.93% rise, while bill discounting reached RMB 821 million at the end of the reporting period. Additionally, retail deposits grew by 12.19%, high net worth customers increased by 22.74%, and wealth management products sold reached RMB 765 million. A significant contributor to revenue growth was also seen in precious metal services, which experienced a substantial 145.99% increase. On the other hand, revenue decline was attributed to decreases in total retail loans and interbank deposits. Specifically, total retail loans decreased by 10.58%, while interbank deposits saw a year-on-year decrease of 17.01%. These declines were largely due to adjustments in business structure, resulting in significant year-on-year decreases in interbank lending and borrowing. In a significant shift, the company's financial performance improved substantially between 2024 and 2025. The most notable change was in net income, which saw a substantial increase of 20.91%. This growth can be attributed to various factors, including operational efficiency improvements and strategic business decisions. The profit margins also underwent a transformation during this period. Specifically, the operating profit margin rose from 34.2% in 2024 to 43% in 2025, indicating improved profitability. Similarly, the net profit margin increased from 24.6% to 31.8%, further underscoring the company's enhanced financial performance. The increase in both net income and profit margins suggests that the company has successfully implemented strategies aimed at boosting its bottom line. This improvement is likely a result of various initiatives, including cost-cutting measures, revenue growth, and operational enhancements. As a consequence, the company's financial health has strengthened, positioning it for future success. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. The data shows that the operating cash flow has increased substantially from $2,115,579 in 2024 to $9,143,511 in 2025. This increase suggests that the company is becoming more efficient in managing its day-to-day activities and generating revenue. The positive trend in operating cash flow is a significant indicator of the company's financial health. It implies that the company has sufficient liquidity to meet its short-term obligations and invest in growth opportunities. The substantial jump in operating cash flow from 2024 to 2025 suggests that the company's efforts to improve operational efficiency are paying off, leading to increased profitability and improved financial performance. The company's debt level has undergone significant changes over the past year. According to various reports, the total liabilities have increased by 19.03% from RM158,559 million to RM188,730 million. Additionally, debt securities issued have seen a substantial increase of 43.45% from RMB 12,746 million to RMB 18,293 million. This indicates that the company has taken on more debt in the form of customer loans and debt securities. On the other hand, interest expenses have shown a mixed trend. While there are instances where interest expenses decreased slightly or remained stable, such as a 2.65% decrease from RMB 3,893 million to RMB 3,893 million, there is also an instance where interest expenses decreased significantly by -49.6% from RM 193,965 in 2024 to RM B 97,093 in 2025. Overall, the company's debt level has increased significantly, while interest expenses have remained relatively stable or decreased slightly in some cases. Management's outlook on the company's strategy is centered around several key objectives. Firstly, they aim to fully implement state-owned enterprise reform requirements by 2026, focusing on high-quality development and team building. This will involve strengthening technology empowerment, business interactions, innovation, and risk management. In terms of financial performance, management expects a profit before income tax of 2.083 billion RMB for the year ended December 2025. They are also targeting growth in the retail banking segment, with a net interest income increase of 1.051 billion RMB. To achieve these goals, management is taking proactive measures to manage risk, including aligning the company with national economic development strategies and strictly controlling risks associated with multiple financing and excessive credit extension. Additionally, they are regularly assessing and adjusting the maturity structure of assets and liabilities, as well as loan and deposit rates, to mitigate interest rate risk. Capital management is also a key priority, with the aim of maintaining a strong capital base to support business development. This will enable the company to continue as a going concern and provide returns for shareholders and other stakeholders. Overall, management strategy is focused on sustainable growth, risk management, and financial stability. The company has a history of paying dividends to its shareholders. This is evident from the multiple references to dividend payments throughout the document, including on pages 115, 118, 119, 121, 130, 141, 143, 161, 199, and 204. However, there is no clear indication that the company has engaged in share buybacks or repurchases. The only mention of buying back shares is related to a specific process involving confiscation of unclaimed dividends and sale of unreachable H shares on page 118. Concerns about inventory buildup and potential disruptions to the supply chain are emerging in various sectors. In the wholesale and retail industries, there has been a significant increase in non-performing loans, NPLs, with numbers rising from 36,095 in 2024 to 210,726 in 2025. This trend suggests that businesses may be struggling to manage their inventory levels, potentially leading to financial difficulties. Similarly, the real estate sector is also experiencing an uptick in NPLs, with a notable increase from 399,400 in 2024 to 298,612 in 2025. While this data does not explicitly mention supply chain disruptions, it implies that there may be underlying issues affecting businesses' ability to manage their inventory and maintain cash flow. The rising number of NPLs in both sectors raises concerns about the potential for inventory buildup and its impact on the overall economy. If left unchecked, these trends could lead to further financial strain on businesses and potentially disrupt supply chains, ultimately affecting consumers and the broader market. That concludes the financial summary for LUZHOU Bank Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.